Hello, everyone, and welcome to today's event, Joint Venture Partnership, Advantage of Collaboration. Please feel free to submit questions in the chat feature on the right-hand side of your screen, and we will try our best to incorporate them into the conversation at hand. As a reminder, this event is being recorded and will be available at six.com in the coming days. So, gentlemen, why don't we start with your name and title, who is your strategic partner, and how long have they been collaborating with your company? And we'll kick it off with you, Mark.
I'm Mark Jarvis. I'm CEO of Giga Metals, and our joint venture partner at 15% of the project is Mitsubishi Corp. And we've been partnered with them for about a year now, since they first got involved and started writing checks. And they mostly wanted to push this project through to the pre-feasibility study level. And we will be releasing that pre-feasibility study within 2 weeks.
Thank you. And Paul?
Hi there, it's Paul Pint. I'm capital markets consultant to White Gold. I'm filling in here for the CEO, David D'Onofrio. Our strategic partners came in very early on into White Gold. That's Agnico Eagle at just under 20% and Kinross at just under 16%. Along with the Power One Group out of Toronto. So it's a very good strategic alignment from both capital markets and from obviously an industry, technical expertise, as well as obviously experience of having Agnico and Kinross as partners.
Yeah, my name is Rick Van Nieuwenhuizen, President and CEO of Contango Ore. Our joint venture partner is Kinross, and it's a 70-30 joint venture. A bit of history on how it came to those numbers, but we are developing the Manh Choh project in Alaska, high-grade open pit, 8-gram open pit gold deposit. And the reason for the JV with Kinross specifically is that they have an underutilized mill at Fort Knox here in Fairbanks, where I'm located, and we're going to haul the ore from Manh Choh, mine it at site, put it in highway trucks, and haul it up to the mill at Fort Knox for processing. So that avoided a huge amount of capital and a huge amount of permitting risk for the company and our shareholders, and we get into production a lot quicker than if we had built our own mill and tailings facility and power plant. So a good synergistic relationship.
Thank you, Rick. And you mentioned there's a story behind it. I actually don't mind if we all elaborate on each of the histories here a little bit more, just in case individuals are new to this story. So why don't you kick things off in that regards? What opportunities attracted you and your strategic partners to embark on these projects? We'll kick it off.
Sure. So Contango discovered the deposit basically from a grassroots level. It was on lands owned by the Tetlin tribe. It's a huge area. It's about the size of the state of Rhode Island. So I think it's the largest contiguous block of private land in the United States. And so we found the deposit, but it was good grade, but it wasn't big enough to really support building your own mill and tailings facility and power plant. Or maybe said another way, it would have been challenging for a junior company to do all that, certainly in this market. And so we took a different path and initially did an arrangement with a joint venture with Royal Gold, who liked the project and wanted to see if they could get involved and advance it to a pre-feasibility level study and then invite a major company in to develop it. Long story short, that didn't happen. And so when I came in 2020, we had a first right, of course, to be able to purchase the Royal Gold interest. So I just kind of rearranged things and brought Kinross in on a 70% basis. Again, the real strategic reason was that, of course, 2020 was a year of COVID, so it was a challenging year to do much of anything, especially raise money. Obviously, I would have preferred to start off owning 100%, but we were already in the 60-40. So rearrange that to the 70-30. But again, the real key part here is that because Kinross had an underutilized mill, we could take advantage of that. And obviously, they would only do that if it was of interest percent-wise to them. So we came up with the 70-30, and that's been a good solution. We're now mining, and we're fully financed, and we'll be in production in 2024. So net to us, we'll get about 67,500 ounces of gold a year, and an all-in sustaining cost of about $1,116. So at today's gold, we should have a good $800 margin. So I think we're in good shape.
And Paul, was Agnico Eagle and Kinross there right from the start with White Gold Corp?
Yeah, so White Gold, I'll give it just a very brief history. So White Gold's located in the Yukon, just there around Dawson City. I'm sure everybody in the world's familiar with Dawson City and the Klondike Gold Rush 125 years ago, and all the placer mining that was done there over the years. But really not up until about 20 years ago were there any modern mining techniques put to use. A gentleman by the name of Sean Ryan, a very famous and infamous prospector, went there with his own thoughts and maps and soil sampling, and very quickly discovered both the Golden Saddle and Coffee deposits. And of course, that quickly attracted the attention of other companies, in particular, Underworld Resources had the saddle, the Golden Saddle, that got sold to Kinross very quickly. And then Newmont now has the Coffee project and is very active in the region. Western Copper is also there with the Casino project, of which Rio Tinto has a very large stake in as well. So the big players are all coming into town. So in 2016, White Gold was formed. It's 420,000 hectares. It's an absolutely monstrous land package with lots of exploration potential. It was very unique at the time. Again, Sean Ryan and his group actively still involved. So Agnico, it's not very common that at such an early stage, a major comes in to take a foothold, but they took just under 19.9% stake in it. And Kinross, having bought the Underworld asset Golden Saddle that Sean Ryan discovered, they actually thought, well, this group knows more about the saddle than we do, so why don't we fold it back into what this group now is called White Gold, and we'll take a percentage of the company in return. So that's how they got their 16% stake. So it currently has a over 2 million ounce open pit resource at north of 2 grams, and just massive exploration upside. The first hole drilled at the Betty, which is along the Coffee Creek Fault where Newmont is, returned 50 meters at 3.5 grams, just under 3.5 grams. So there's lots of good near surface, high grade exploration potential on top of the existing resource. And so Agnico and Kinross have continued with their pro rata as financings go along. So it's been a great partnership to have, along with the Power One group, who obviously continues as well.
Thank you. And Mark, how did or why did Mitsubishi get excited about the Turnagain project?
Well, first of all, from our side, I mean, we've got this, giant deposit, which is low grade, very low strip ratio, open pittable nickel sulfide resource. But to actually build a mine here is something on the order of $2 billion. And we're a very small company. There's no real feasible way forward for a very small company to build a $2 billion mine. And so we decided early on that we would seek joint venture partnerships at the project level rather than dilute equity. You've got to dilute something. And so just the math said dilute the project rather than the equity. Frankly, with the way the markets have been going and our market cap has been going, we'd be better off to be a private company. I don't see any advantage to being a public company right now. We just started looking, in conjunction with Martin Bydra, who's our president, who has a great deal of experience selling nickel and cobalt products to end users. And so he knows all the end users. And we just started approaching them, and Mitsubishi reacted very well. just to be clear, we're not dealing, people get the misconception that we're dealing with the car company. Mitsubishi is a conglomerate. It's a giant company in Japan. And the car company is one division, but we're not dealing with them. We're dealing with the arm that does commodities trading. They're the largest commodities trader in Japan. And specifically within that arm, we're dealing with the battery raw materials division, which was formed about 2 months before they signed the deal with us. So they're very interested in nickel and lithium. So that's how they got in. We approached them. It took a couple of years before they got really serious. Nothing happens quickly with companies of this scale. Once they got serious, it probably took about 8 months of really, really extensive due diligence. And they've looked at, as far as I can tell, every large undeveloped nickel deposit in the world, and they settled on ours. And part of it's the deposit, part of it's the team. So that's how it all happened. They got interested. Every bit of our engineering was credible. We didn't sort of apply rose-colored glasses the way a lot of people will, frankly, especially at the PEA level. And nothing in what we were projecting as what this project looked like, turned out to be questionable at all. We were always very careful to be very accurate in how we were describing it. And at the end of the day, that paid off for us. So that's our model is we've got Mitsubishi in for 15%. Once the PFS is out, there are a lot of strategics sort of waiting on the wings, waiting to see what that looks like. And I think it'll be time to get the next tranche of money. We're looking for, another 50 million US to take this all the way to shovel ready. And we've got mining companies, we've got car companies, we've got battery companies, all waiting to see what this PFS looks like.
That's interesting, Mark. Thank you. I didn't know. I was assuming the auto company as well, but it's more the commodity company. In regards to those auto manufacturers, you are the only one with a nickel asset on the panel here. Could you discuss further about the potential of other auto manufacturers or individuals interested in the nickel space? Are they acquiring assets within Canada further?
Well, I mean, nickel's a real problem for the North American and European auto manufacturers in terms of the supply chain, and particularly in Europe, they're evolving environmental standards that, shall we say, preclude sourcing their nickel from China and from Indonesia. There's environmental things going on. Indonesia has now become the largest single country source of nickel in the world, starting from nowhere about 15 or 20 years ago. But the environmental destruction that's happening is almost unbelievable. And in the age of the internet, it's hard to hide that. So the Europeans, car companies, are very, very interested in the environmental standards by which you produce your nickel. They're interested in jurisdictions that are not corrupt. They're very interested in your carbon footprint. And we have a path to carbon neutrality, we think. Our tailings absorb CO2 from the atmosphere. You can measure that. And starting from a very low carbon footprint, we think we can get to zero carbon. So for scope 1 and 2. So that's, they have a real problem in that the current supply is not what the Europeans think of as clean. And so they're going to have to develop new sources of supply in order to meet their own environmental standards.
I'm going to open this up to the group, but new source of supply. I had a question prepared here, and again, I'll leave it open to the group, but I'm interested in wondering if you see the roles of joint ventures changing in the future. You hear there's less and less deposits being found. Does that mean larger players JVing or being a strategic partner earlier on? Because the norm in the industry right now is juniors blow out their share structures and they acquire them on the cheap. But I'll feel let everyone chime in here.
I'll start. I think that has been the model, and I think frankly the model is broken, which is why we've kind of changed track and want to get cash flow early. And I know that's that's a lot of people say they want to get cash flow, but what they really want is the major company just to buy them out. And then that's sort of the unspoken rule or the spoken rule. We actually are seeing a path forward where we actually have a very low share count. We've only got we'll have less than 10 million shares outstanding, and we'll be cash flowing $5 a share. So that's pretty strong position for a junior company to be in. So in terms of joint ventures, I still think the joint venture path is a good path to go, because it just costs a lot to build anything anymore, and it takes a lot of time. And you've got the Lassonde curve, so you've got to survive the valley of death there. And I think the only way to really do that is to have cash flow and to have multiple projects going, or have them all lined up so that you're not sitting there with your pants down and nothing to say except, well, we're permitting, or we're trying to raise capital, or we're trying to do this, or trying to do that. You've got an active project in the market that's adding resources, or advancing them from inferred to measured, or inferred to indicated to reserves. I think that's the only way a junior company is going to be able to survive on a sustainable basis going forward. I mean, we're no doubt we'll always have markets, and we'll always have the flavor of the month sort of investment criteria. But I've spent a lot of my years finding huge deposits. We found Donlin 25 years ago, and it's still not developed. So I'm hoping it gets developed before I get buried, but I'm not convinced it will. So I like staying next to the infrastructure in Alaska. We know Alaska well, obviously, and that's going to be our path forward here.
I'd also like to comment that, I think for our sector, the capital markets are basically broken. And what I think about is, 20 years ago, brokers made money buying and selling stock in the open market, as well as through financings. And now commissions on buying and selling stock in the open market are basically zero. And so if you're in the junior mining sector, brokers are there to do financings, full stop. And so that source of liquidity of buying and selling stock, and having liquidity and having valuations that approach something reasonable, that source of liquidity has disappeared. And so I think that's a fundamental problem in our business. And I've concluded that the only way around that is to actually deal directly. Basically, we are pretending we are a private company and dealing with the strategics on that basis. And so we're looking for valuations on the project. I mean, our deal with Mitsubishi implied a value for us that's 3 times what we're trading at now, and that was a year ago. And the project has advanced since then. The valuation we're looking for in the next tranche is much higher than that, much higher than Mitsubishi got as the first mover. So, but the markets ignore that. And I just am of the opinion that it's mostly because, basically commissions are zero in the open market.
Yeah, I mean, Mark, I can add to that, and Rick as well. Having spent 25 years, in institutional equity sales and investment banking up until 5 years ago, and then helping out with some startups of some gold companies. The market drastically changed, right? 20 years ago, there was, as you said, there was commissions available. There was a lot more activity. There were a lot more institutions and actual funds that focused on commodities and precious metals and the like. And a lot of that has disappeared. The ETF market swallowed up a lot of that as commissions went down. ETFs, became a place to go, and so the active manager disappeared. So there's been a hunt for the new pockets of money, be they family office or JV or other corporates. And I think that in this day and age, again, the market is broken. There's a lot of companies that probably shouldn't be public, but the private market is even worse, right? At times, it's very hard to get the private funding. So, there's a lot of companies that are going public through either retired shells or whatever else has happened, and then the access to funding is exceptionally difficult. And so, you guys have JV partners and the like. We have Agnico and Kinross as strategic partners. And again, if you look at how they think, we get open access at White Gold to what they are looking for as White Gold. We're a much earlier stage company than you guys, but we're at the beginning of that Lassonde curve. So it's still a time of exploration discovery, and so there's no cash flow in the near term. But having access to financings through those groups and knowing and having technical help and strategic help in guiding the company to where it can get to, someone's going to build this. I mean, and it may or may not be White Gold. And if I was a betting man and sitting outside, and I'm not an insider in the company, I would bet that as it gets to a certain point, as long as there's markets there, that I think there'll be someone else who'll take this on. But having these strategic partners certainly helps the group finance and manage the process as it goes forward. But yeah, the regular capital markets is just busted.
I want to push back a little on that. So if it's broken, so there's no brokers making commission, but there's now social media, YouTube. You can get your story out to a broad range of people. In that regards, is it broken or is it a stock picker's market?
That's why we use companies such as Six to try and get our message out. I mean, we're very much trying to pitch to the retail audience, and to the smaller institutions as well. So that's the strategy that everyone's adopted, is let's go directly to the end user rather than trying to go through the broker. And it depends. I mean, right now it's hard. You can tap dance and sing and nobody cares, but that will change, and we'll see. My theory is you have to keep out there. You have to keep telling your story, and then when the market changes, as it always does, suddenly you'll catch fire, and everybody will want to get in at the same time. That seems to be the way it always works.
Yeah, I think just add another comment on that, and you're absolutely right, Kyle. I mean, that's another big change that's happened in our industry and across all industries, not ours, obviously. Just every taking advantage of social media and marketing your story that way is definitely different, and I think we're all adjusting to it. But the problem is it opens up the faucet to everybody and their brother can market whatever. And I think it's hard for investors to figure out, to separate the wheat from the chaff. So I think needs to be, or it'll just take time for investors to sort of get educated on this new platform and how to separate the real stuff from the crap. Because we all know there's far too many junior explorers out there. And I'm sure it's the same in the pharmaceutical businesses and other businesses. There's all sorts of, snake oil salesmen and, selling, people selling all sorts of elixirs, from hair loss to whatever. So I'm sure we're no different. But that's got to be a challenge for investors to really understand with the new platforms, how do you separate, the fast talkers from the people who actually have something that's real? So that'll probably just take time and sort itself out.
Yeah, and I think Mark made a good point too. I mean, this market will come back, as it always does. Sometimes cycles take a little bit longer, and Rick, you're absolutely right. And when we say that the market is broken or whatever, just the way it used to be is vastly changing. And you guys talked about social media and all this, and that's again why we're all on this panel and we're working with companies like Six, and there's other channels out there. But I do still believe that separating, as you said, the wheat from the chaff is the brokerage community, the analyst community. There are still some very highly respected analysts that are out there, and there are some great letter writers, and you just have to be able to find and tap into the proper channels, for lack of a better term, that can still make sure that good companies get through to the right investor people, and that the ones that shouldn't be there, eventually that they'll fall off as well. But yeah, it's a challenge, but like with anything, you change with the times, and we're all doing that. And with the help of Six and others, I think we'll get there. And again, strong companies will survive. There's a reason that the three of us are on here, and these three companies have partners in both JV or strategic, or however you want to look at it. And that's because they're they have something that's good in the ground, in a great jurisdiction, management teams. There's some history there, done it before. I mean, this is what creates the positive feeling in investors to invest in something, not just a snake oil salesman. So hopefully we can keep that going.
I think Paul made a really good point there. I want to just re-emphasize, and that is, when you have a joint venture, like Mark's company, joint venture with Mitsubishi. I mean, again, these are, and Kinross and Agnico Eagle, these are all real companies that do real due diligence. They don't invest 5 or 10 or 50 or $100 million at the flip of a coin, or because they've heard some fast talking snake oil salesman. They're turning over every rock, and so that's something that investors can take a look at and say, okay, well, if Agnico Eagle or Mitsubishi is taking a hard look at this and likes it, there's something really real here. It's not, and that is a big advantage, and perhaps something that we as CEOs maybe don't sell enough of when we're telling our story. That the fact is that a major company is taking a real interest in this thing and is putting hard dollars to work. Not that they can't make mistakes, but they have whole teams that spend a good part of their career on this stuff. So it's a good milestone achievement when you've got a strategic investment or a form of joint venture.
I just want to add to what Rick's saying. He's absolutely right. I mean, the level of due diligence that we went through with Mitsubishi was incredible. And this part of the company, this division of Mitsubishi, is in the mining business. They like to have, usually they end up with 20 or 25% working interests in an operating mine. At the end of the day, they like to partner with mining companies. They don't want to operate, but they understand the business extremely well. I think they're involved in 10 operating mines worldwide, and they're also involved in development projects like ours. So it wasn't just the internal team, which knows what they're doing, but they hired a very conservative external engineering team to help with their due diligence. Very conservative. And in fact, this external team concluded that all of the assumptions in our PEA were reasonable. And in engineer speak, you don't get higher praise than that. So as soon as they said that, I went, okay, we've got him. And indeed, we did close a deal not too long after that. And that same engineering team has been working on Mitsubishi's behalf with us as we've gone through the PFS process. And it's turned into a very fruitful collaboration. But also to add to what Rick says, I mean, that's one of the clues that a retail or institutional investor can take, is who is the partner. And why would the partner be there? Believe me, it doesn't matter the size of the check. Nobody in a large company like this wants to make a mistake. They're terrified of losing their jobs. And so, nobody wants to look bad. So they are extremely careful about what they invest in. And another part of it is it's not just the retail investors and it's not just the institutional investors. The strategic investors pay attention. So the fact that Mitsubishi is involved and that everybody knows that they know what they're doing, they know how to do a proper due diligence, to a car company that's going, okay, we have to vertically integrate. To be completely frank, none of the car companies have a clue about the mining business. Why would they? Some of them are scrambling to assemble teams, but in the mining business right now, where do you get a good mining engineer? Where do you get a good metallurgist? Where do you get good geologists? They've all got jobs. It is more than full employment in our sector. And so it's extremely difficult to put together a proper due diligence team in this market. It's not impossible, but you really have to bid up the talent, as it were. So the fact that somebody that everybody knows what they're doing has chosen this project matters, and they can, to some extent at least, rely on Mitsubishi's due diligence when they're evaluating our project.
I like what all you gentlemen are saying. That makes a lot of sense. And I'm a retail investor, self-directed, that has no technical background. And it is a stamp of approval seeing these strategic partners or JVs involved. That being said, I'm just going to be playing devil's advocate as much as I can, obviously, here it looks like. You might look at a strategic partner, like, for example, Eric Sprott, and he has maybe a shotgun approach, but like Pure Gold Mine, as an example, there's a lot of strategic investors behind it, and it still failed. So with these strategic investors, how do you differentiate which ones are good, which ones are bad? Like, to an extent, Kinross as well. Is it a shotgun approach, or go through their due diligence process, or help us determine what is a good strategic investor? If that makes sense.
Well, in our case, it was very simple. I mean, we knew they had an underutilized mill. They had looked at the project when Royal Gold was looking for a partner and an operating partner to develop the company, because Royal Gold's a royalty company. They're not supposed to operate, right? So they were just trying to be a middleman and end up with a royalty. And so I think that probably would have happened back in 2018 when they ran that process. But Kinross had their issues with in Mauritania. And so everything kind of went on hold. You hear things, people, you say, okay, well, they were actually pretty interested in that opportunity to look at processing the ore at Manh Choh up at Fort Knox. So obviously they must have known what they were doing, because they're a major company and they wouldn't be seriously considering something. And if something hadn't happened in Mauritania, they would have done it maybe in 2018. Just knowing that background, and part of that's bar talk, and part of that's just knowing being plugged into the industry. That's what allowed us to just quickly make that pivot and move in that direction. So that's being opportunistic, I guess, and you always have to be opportunistic in this business, because of markets, because of just the way it's a fast-moving business. So I think that's a big part of choosing your partners. You've got to be opportunistic. It's not the window can be open for a period of time, whether it's a marketing, the financial market windows, or the opportunity to develop a strategic relationship. They don't stay open. They're not just open doors that you just jump through all the time. So gotta be opportunistic.
I think you're on mute, Mark. Yeah, there you go.
Yeah, I just want to make a quick comment here, is that, to answer your question, Kyle, the fact that a major company gets involved is not a guarantee of success. It improves your odds, and that's all you can really do. So,
Yeah, I would add as well. And first of all, Kyle, thanks for the nice comments. We all three of us are expecting buy tickets in the companies from you immediately following this call. Thanks for that. But also, just very quickly, I think that, you know, as both Rick and Mark have said, like, not everything is going to work out, and mining is hard, and business is hard, and you have so many boxes you want to check off, and a lot of these strategics do, and I think as the world moves forward more and more, and Mark, you mentioned, you know, social media and how they view the nickel in Indonesia, and so you tick off jurisdiction management. There's so many issues that come up, environmental, and let's face it, these rocks have been in the ground for 1 billion years, so you don't really know exactly what's there sometimes, and sometimes things just don't work out. And so even the majors do, you know, for lack of a better term, make mistakes. But as Mark said, and as Rick has said, you know, your odds are further improved as a smaller company if you're growing and you have some of these strategics that do the due diligence, have seen it before, have made mistakes before, have known where to look for those, and still make an investment in your company. So as a retail investor, you look at all those boxes have been ticked, and I think you can make an educated investment. But it's not a guarantee, as they said.
No, definitely. Again, just playing devil's advocate here, but let's get back to discussion about with your joint ventures. It's a business relationship. It's not a honeymoon relationship with your newlywed. In that regards, the main conversation at hand is most likely execution decisions, correct? Can you go talk further about these decisions and what's it like to be in a room with your strategic partner?
You know, maybe I'll start with that. It's interesting. I've never worked for a large company. I used to be a broker. I ran my own business, and then, you know, I've been CEO of a couple of companies, but they're small companies. Dealing with a truly giant company is an interesting experience for me because, you know, I've seen the decision-making process. I wouldn't have a clue myself how to run a giant company. But I see the way that Mitsubishi processes information, and I see the way that they run a meeting. I think they've all taken courses in how to run a meeting. And they're very, very good at it. So you've got these extremely intelligent, driven people that all are sitting in a hierarchy and are reporting higher up, you know, doing their best to make decisions in a very sort of risky, you know, mining environment. And to me, it's just been very, very eye-opening about how a large company actually works and how decisions are taken. And decisions are made. Just because they're huge doesn't mean they can't be nimble. And for me, it's been a real pleasure, not only, you know, dealing with Mitsubishi, but I think more generally, I like the Japanese. I like the way that they deal. I like the way that they deal honorably. You know, you're not sort of looking over your shoulder thinking, how are they trying to get me? They're really trying to make everything work. And anyway, so for me, it's been a pleasure getting to know how this particular large company works.
Maybe I'll just chime in a joint venture. And again, that's it's not a strategic relationship. It's not a strategic investment. It's a business arrangement. And ours is 70-30. And frankly, the guy spending the money gets just to tell you how things are going to work. I mean, that's just the reality of the way the world works. So I've done 50-50s before, and they do work. We formed a 50-50 joint venture with Barrick, with Nova Gold. That joint venture has been tested for a long time, and it's been talked to both companies as a follow-up just for my own curiosity, and they say, yeah, it's a good, healthy joint venture. It works well. But, you know, if you formed a joint venture and someone's investing, you know, $50 or $100 million or $500 million or whatever it is of their money, they're going to tell you how it's going to get spent. I mean, it almost doesn't matter what the joint venture document says. That's the reality of it. And so, but that's the reason for bringing the big company in. They have the expertise. They have the team that has built mines, and frankly, that's just not something that junior explorers are set up to do. And to make the transition from an explorer co to a mining co is tough. And anybody who thinks that's easy is completely BSing you. It's tough, and it's even tougher in markets like this. When you've got a runaway market, a few things can fly through the process, but usually they get, things catch up with them. I remember, Mount Milligan was a great story, and it was great for the copper market, and it's great for BC. And the first thing that happened is they had to write the whole damn thing off. So this is a tough business, and I think this investors should always keep that in mind. It's not easy. So you really got to analyze what people are saying and what the numbers are telling you. So that'd be my cautionary statement to investors. But it's a good business, and you can make a lot of money, and we do real things. We actually we're the foundation of society. So I think we can all be very proud for what we do in the mining business.
And Paul, before you chime in, just back to you, Rick. Kinross just had their groundbreaking ceremony at Manh Choh. I'm just wondering how your relationship changed, and if it's going to change at all in the next 3 to 4 years.
Well, I just point out we both had the groundbreaking ceremony. It's a joint venture, so we're all there. It hasn't changed a bit. I mean, it's a milestone achievement. So I'd say at a very fundamental personal business level, it just makes something real, and you form a bond as you advance something and achieve the common goals and objectives. You're kind of solidifying that bond and that relationship. And it was having a ceremony where you're all lined up with the shovels, the golden shovels, and all that. It's a bit corny in some ways, but it's a very real. The outcome of that is a very real bonding exercise, and so you've achieved something in common. I'm sure Kinross was waiting for us not to be able to finance our 30% interest in the project. I'm sure they would have pounced on us if we had not been able to. But I think from their side, I suspect there's a bit of respect that, hey, these guys were able to pull this off in a tough market. We'll wait for the next opportunity, but because it is business. But it's an interesting dynamic, and I mean, we're all people, right? So at the fundamental level, that's what makes everything work. And so developing relationships and having good, honest, open dialogue is always a key in any relationship. But in particular, specifically to joint ventures, it's not any different in that relationship as well.
Thank you. And Paul, how's a different strategic partnership versus joint?
Yeah, I mean, so I would just add both Rick and Mark made very good points. So I'll be as brief as I can. But as much as important as it is for a junior mining company to have a strategic or a JV come in, it's also really important for that junior mining company that it's the right partner. And they both use terms like open dialogue, support, technical knowledge, the guidance, all that. And that is really important. If it's just an investment and you don't have communication, sure, you can point to a few positive factors of that. But I can speak on White Gold's behalf, very much like Rick and Mark did, that there's an ongoing fluid relationship, communication, site visits, technical updates, guidance, and all that. And I think it's incredibly important that it's a two-way relationship, even if one is a stronger partner in a like a 70-30 JV. With us, it's a strategic investment, but they're very engaged. And so that is, as I said, it's just as important that you have that ongoing engagement, because I think it was, as Rick said, if somebody tells you that that they're going to go out and build this mine and it's a junior company, then it's not true. I mean, when I was marketing my previous company, where I was president of a gold company, I'd go out and they're going, "Are you going to build this?" I said, "I can't even build a birdhouse. Like, I'm a capital markets guy, and this is what I do, but we have other professionals in place, and we're going to get partners and the right team to eventually build it." And that's what these strategic partners can be very helpful in.
Thank you, gentlemen. Those were all the questions I had. So we have some time left. Why don't you take the time to talk about the upcoming catalysts for your specific companies? Mark, we'll start with you because I saw an individual in the chat was curious about updates on your PFS. So why don't you kick things off?
Well, at this point, we are hoping to have a press release out on our PFS in about 2 weeks. And I should always say plus or minus. And part of the uncertainty isn't to do with the engineering progress of the PFS itself. Part of it has to do with the approval process within Mitsubishi for such an important press release, because their name is on this, and there is a process, and it does take time. So, but that is, for us, it's going to be the milestone for the next, year or so at least, because it is a very detailed PFS. There's different levels of these kind of engineering documents, but it is a significant de-risking of the deposit and of the project. Particularly, our geometallurgical program has been very successful. We now feel that we've got a very accurate sense of what recoveries are like in all the different parts of the deposit to quite a high level of accuracy. And that kind of de-risking is extremely important. We've got a very simple project. It's pentlandite. 99% of the nickel and cobalt are contained in pentlandite. So you are trying to recover one mineral. You're not trying to recover 3 or 5 minerals. And that simplifies things enormously. And, that simplicity, crush it, grind it, float it. It's that turns into low risk, technical risk. There's nothing new that we're doing. It's just absolutely straightforward how you process this stuff. And now, because of the geometallurgical work we've done, it's very predictable how much you're going to recover at every stage of the mining process. And that is a milestone because there are so many potential partners waiting to see this. Some of them have already signed NDAs. They're in our data room. Some of them are waiting to see this before they're going to take the step of signing an NDA. But it's a very important milestone. And I think with the appetite for nickel right now, it's going to kick off the next stage of deal making. We're looking to sell, call it another 20% of the joint venture company. And we're looking to sell that for enough money to take this to shovel-ready status. And so very critical milestone. And then the next milestone after that will be when we sign up the next partner.
Thank you. And Paul, for White Gold in 2023?
Yeah, so White Gold is this is our season of drilling, really May, June through September, October. So just wrapping up our most recent drilling campaign, focused a lot on the exploration upside of the area. The Yukon is becoming very much in focus again. And Mitsubishi, actually, I forgot to mention that Mitsubishi made an investment in Western Copper not that long ago. So they're, I think, at a 5% stake there. So Mitsubishi, Rio, Newmont, the big boys are all coming in, and they're looking for the potential of this district, let's call it, which is at its still very early stages, so to speak. But for White Gold in particular, focused on 3 projects: Betty, Vertigo, and Nolan, really high potential very, very prosperous. I mentioned that at Betty, the first drill hole in the prior drill campaign hit 50 meters of 3.5 grams. So watch for a lot of news coming out of White Gold as this drilling season wraps up. So starting in the next month or so and flowing right through to the end of the year, you'll see lots of drilling update. More than anything, we already have the resource, as I said, over 2 million ounces of north of 2 grams open pit. So we're really going to show the exploration upside of the region.
Thank you. And Rick? And you're on mute, just heads up.
Sorry about that. There's a plane going over, so I put it on mute. So our next milestone is production. So we had the groundbreaking ceremony of the mine. So we've started mining, and most of that's pre-stripping waste material, but we are stockpiling ore when we encounter it. We'll build a stockpile at the Manh Choh site itself, and then we'll start trucking it up to the Fort Knox site to build a stockpile there, and then we'll batch process it starting next year. And we're actually, not settled on next year's budget yet, but we'll do that here the next month or so. But expect production sometime in the first half of next year. Again, our production profile for our 30% share of the deposit. Again, this is an 8-gram deposit, so it's really high margin stuff. Great metallurgy. We're getting, probably average about 92% recovery. So we're going to generate at today's gold price in excess of $50 million of free cash flow on an annual basis. We have less than 10 million shares outstanding, so you can do some quick math there. That's $5 a share. So and this is all, Kinross does all the heavy lifting here, so that leaves us free to do what we do well, which is explore. And we're exploring our second, what we think will be Alaska's next mine, which is the Lucky Shot project. High-grade mesothermal vein. We've outlined a small but high-grade resource there. It's about 100,000 ounces, averaging about a half ounce per ton. It's an underground mining scenario. We've got the underground development rehabbed, and we're drilling from the surface right now as we speak, just to get some additional drilling done while the weather's good here before the winter sets in, and then we'll switch to underground, drilling from underground. Those are short holes underground. Our objective is to outline about 400,000 to 500,000 ounces of gold, and then put a mine plan around that. Again, when you're dealing with grade, something like half ounce per ton, high margin material, we'll put together a mine plan, and our objective is to just keep increasing our cash flow and doing what we do well, which is explore. We'll stick close to the road system and the infrastructure here in Alaska. We are looking at other opportunities in other parts of the world, Nevada and the lower 48, Canada. Probably not going to go anywhere too funky, and we'll stick fairly close to home here. But good milestones coming up, and we want to, because of that Lassonde curve that we talked about and what I referred to as the Valley of Death, you want to have something else. We've got a good project in getting into production. Let's get the next one into production, and let's move along quickly and go with something that's high grade, so that we don't have to worry about whether it's going to be economic or not.
Perfect. Gentlemen, thank you for the discussion today. And for the people that attended, if you did tune in late, don't worry, we are recording the event, so it will be available on 6.com in the following days. But thank you for your time, gentlemen.